Hello, everyone. In this episode of Flipping Out, my guest is Marcus Maloney. And there are certain guests sometimes that really resonate with you, that you have very similar interest, kindred spirits. And this definitely is the case with Marcus Maloney. Marcus and I both were high school dropouts. We questioned the educational system. We had that natural entrepreneur spirit built into us. We just didn't understand why things were required to be done the way they were to be done. We had questions, and when you question authority, they don't always like to answer you. And so we get into that here late in the interview. But we get into a lot of different stuff here. We get into how he got started out. I mean, he grew up on a 59-acre farm about 45 minutes south of Chicago. We talk a little bit about Chicago, what a great city that is to visit and a great time of year to go visit. We talk about his investments over the years, things he's gotten into. We talk about utilities. We talk about almost everything in this interview. All right, so want you guys to really sit back, relax, take in a lot of information here is going on in this interview. A lot of great answers by Marcus. Just a really lot of good wealth of information that he provided here in this interview. And if you want to get more info from him, it's marcusemaloney.com. On that website there, you can see some of his videos. You can also go find him on YouTube as well. But he also has a link to his educational program and social media and all those kind of things. All right, guys, catch you in the interview. Hello, everyone. Welcome to another episode of Flipping Out. I'm super excited about today's guest. We have some things in common. One thing we'll get into, we'll probably speak a little bit about that shortly. But his name is Marcus Maloney, and I was introduced to him recently. I had not known Marcus before. But I love guests like this where I don't know a lot. I get to do a little bit of deep dive and find out a little bit of history about him. And he's got a great website. It's marcusemaloney.com, where you can find all kinds of great info on him here and read the history of him. I mean, he grew up on a 59-acre farm about 45 minutes south of Chicago. I want to hear more about this, Marcus, because this creates a work ethic when you talk about a farm.
Okay.
That has bled and led into your entire life. So why don't we do this? The first question I'm going to ask you is, how'd you get started in real estate investing? If you would just lead us off with that, and then we'll go.
Sure. Well, first of all, thank you, Paul. Thank you for having me on Flipping Out, man. I really appreciate it. And hopefully going forward, we'll become closer friends. I know this is our first time connecting, but I look forward to a long lasting relationship with you, man.
Likewise.
Yeah, thank you. So let's go back. We're talking about investing, right? So I'm gonna give you guys a casual story of how I actually first started with my first investment. And you will not believe what it was. So everybody talk about what they flipped before. They flipped cars. They used to flip this and flip that. Well, my first introduction to real estate investing was buying low and selling high, right? That's the foundation of every wise investment is you make money when you buy. Well, the first thing that we had to buy when we were little, living on this 59-acre farm, was piglets. Okay. So unlike most of our my pupils, everybody during the summer they would play, and immediately in August, they'll go school clothes shopping. Parents buy the school clothes. They come to school with new school clothes. Mm-hmm. Well, in order for us to get those new school clothes, we had to buy a piglet in early spring, March, April. We'll buy that piglet for $10 to $15, and then we would raise it over the summer, feed it as much as we could, and then take it back to the auction and sell it, at a higher price because it's paid by the pound. So we would buy this piglet for, a little bit of nothing, and it weighed 5 to 10 pounds. Well, pigs, as much as you can feed them, that's as much as they eat. So then we would, by the time summer would end, we would have, a 200-pound pig, and we would take it back to the auction. And our $10, $15 was then flipped to about $300. So that's how I learned how to buy low and sell high. And that's kudos to my grandfather. So that was my first foray, Paul, into real estate investing. So I know not many people got started that way, but that's incredible. That's how I got started.
Marcus, that's like the greatest thing ever. There's nobody that could top that flipping story. I mean, when I was young, I flipped candy. Like I would buy candy at the candy store, those little Swedish fish for half a cent each, and I would sell them for 2 cents each over at school. So this is similar. That's great. But all the pig,
Yep.
but you had to raise it and do it. That is awesome.
Yeah. Yeah.
Great thing. Is your grandfather that did that? That started that with you?
Yeah. That's one of the things that my grandfather started with me, and we always had an entrepreneurial background. And that was just our first introduction. So, like, we being on that farm, being right outside of the city of Chicago, we would have our family, friends, cousins, everybody would come. And yeah, they would be like, man, you have your own pig, your own stable of piglets. And they were like, man, they stink, they nasty. And I said, yep, they smell like money. And that's the way we like it.
Absolutely. Oh, that is great. But it taught you to buy, take care. It's like you're fixing and flipping a house, right? It's a
Yep.
similar concept. You're taking care of this animal, growing it, and then you resell it later on for a profit.
Yeah,
So
and it was a lot of work. I mean,
yeah,
it was 4:30 in the morning, 5 o'clock in the morning, make sure they're fed, and then everything like that. But we did have an aspect to set it and forget it, right? You get out there early in the morning, do all of the feed. You don't have to walk a pig, you don't have to do any of that. It's just feed it. And that's the way I think of investments. As long as you feed it and you buy it right in the beginning, in the end, it'll be a cash cow for you, or in this case, a cash pig.
cash pay. And you're known as the equity king. So you kind of created it there. I mean, you can't get much more equity than $15 going to $300. I'm sure you had some costs with feeding and that kind of thing,
Yep.
but still, that's quite a bit of equity you got in there. That's tremendous.
Yeah. And you know what, Paul? Just to really answer your question, how did I get started in real estate? Again, my family was very entrepreneurial. My mom, she was buying and flipping houses. Well,
Love
two
it.
houses. This was back in the late 80s. Me and my brother, again, only thing we knew was work. You go to school, you come home, you go to work. So she bought these two houses. One was a fire damaged house that was in a fire, and one was this old raggedy rental. And me and him, we looked at this and we looked at each other and we were like, okay, this is more work for us, not seeing the potential that she saw in these properties. So we worked with the contractors, got the properties cleaned out, got them rehabbed, and she sold one. And then she showed us the check of what she made on that one. And then from there, I was pretty much hooked. I was like, wow, you can take something that's deplorable, trashed, and then, spit shine it, make it look good, and sell it at a premium. And that's what she did. And then the other one, we still own in our rental portfolio to this day.
Oh, wow.
Mhm.
It's the truest sense of the old terminology of turning garbage into gold, right? When you get some of these rough, beat up houses, especially a fire damaged one, right?
Yep.
That requires some extra levels of rehab for sure. When you turn that into something, you make a nice profit on it, man. There's nothing more enjoyable than that. But the one that you have as a rental has probably paid itself over. I can't tell you how many times since
Man,
that's
20,
been
30, 40, 50 fold, honestly.
Yeah. And that's the biggest mistake. And most real investors will tell you, and I'm one of them, and I've made this mistake many times over, is selling the rentals too quickly. I've sold them over the years. You get one, it's a headache, it's a pain. I get it. If it's constant problem, that's one you may want to get rid of, but you should replace it with something else, right?
Yep.
Because you want that long-term equity growth, those tax write-offs, the tax advantage that we get with real estate investing is like no other type of business out there. So we need to take advantage of those things. And that's huge.
And you know what? And I always tell people, we all get into real estate for one reason, right? The majority of the time, no matter what that reason is, it's normally, independence. It's the passive income. We want to be able to live life on our terms. We want to be able to do what we want to do and still know that we have income coming in. And the only thing that can do that is buying passive assets, not fixing and flipping. Although I'm a fix and flipper, not wholesaling. Although I'm a wholesaler, when you stop the work, the money stops. But as long as you have those rental assets, if it's a duplex, fourplex, 300 units, as long as you have that, at the beginning of the month, guess what? Yesterday was the first, today is the second. Now I'm starting to see checks coming in my bank account. So that's what we all, really get into real estate investing for. It may have some derivatives, hey, we want the money to send our kids to college, or we want the money to bolster our retirement plan, or we want the money to do something else. But we want that money and those assets to work for us and not for us to go out and work for them.
That's the absolute truth. And multiple streams of income is something we all strive for, and different types of income is great. Whether it's income from rentals or selling a property with owner financing, where you're getting another stream of income from that, right? Where you don't have to worry
Hmm.
about the tenants and toilets. That's something that a lot of times in this business gets kind of overlooked because, it's just not
It's
as
not
sexy,
sexy.
right?
Yeah, yeah, it's not sexy. You go to home, you go on HGTV. What do you see? You see people fixing and flipping, and trying to wholesale deals, all of the transactional stuff. But if you buy an asset right in the beginning, that one transaction, can pay you dividends for a lifetime. So it's not sexy, but it's the right thing to do.
Absolutely is. And talk about buying right. And that's what you do. You're known as the equity king. And the only way you get to be the equity king is just only two different ways to do it. Buy right from the beginning, where you have some built in equity there too. Or secondarily, you hold it for a long enough period of time that you're going to gain equity over time. What's your strategy on that? Obviously, you want to buy it right, right? Obviously,
Yep.
that's all of our goals. So why don't you talk a little bit about that?
So both, I want to buy it right, and I want to hold it for as long as I possibly can, until that asset reach that life cycle, and then, like you said, we can replace it with something else. So we do, a lot of innovative marketing strategies, direct to seller, to try and find these assets, like my mom did, 40 years ago, a fire damage property, or property where there's tenants that's squatting in the property, and the landlord is tired and they just want to get rid of it. Our whole goal is to go out and find problems. Once we find those problems, okay, team, what can we do with this problem? How can we resolve this problem, create a solution where it's a win for us, it's a win for the seller, and it's possibly a win for our end buyer, if we're going to wholesale it or fix and flip it. So it's, one thing that I want to drive home to your listeners, Paul, is you got to be able to find problems. He who can solve the biggest problems make the most income.
That's absolute truth. Your first thing you do when you go direct to seller and you're talking to them is try to find out what their pain point is, which is
Hmm.
their problem, right? And now you got to figure out, how can I best be the problem solver and to take this issue and help them and still be profitable on my end.
Yep, yep. And sometimes you may not be the best solution for
Yeah.
them. And you have to be transparent
Yeah.
and do deals with integrity and let them know. There's plenty of deals that we said, you know, our offer is not going to be the most money that you're going to get. You could probably get more money on the table by going to a realtor, or going, selling it for sale by owner or something like that. And a lot of times, those sellers will then come back and say, you know what? I had one specifically. She was like, you know what, I can get more, but you was transparent. I just want an easy transaction. Seems like this is going to be easy. I'll take the hit and lose money on a transaction, or not make as much money, as long as I can get this problem solved immediately. And those are the people that you're really trying to find.
Those are the ones you want. And you built that confidence in you to them, right? By being transparent and telling them exactly you're going to be able to make more doing this. And they respect that and like that so much, they want to go back to you, right? Because there's plenty of snakes out there who would try to rip them off and try to take advantage of people out there. Unfortunately, there are some in this industry. But when you're transparent like that, when you do things the right way, it comes back to you tenfold, right?
Yep, yep.
This universe just works that way, right? It comes back to you. It's a karmic universe for sure.
It is. It is. I'll give you one example, Paul. So we had a seller that gave us a call, and this is one of the things that we always do now. Is she said, "Hey, the property is vacant. It's been vacant for a couple of months, and I just need to sell it." Right. So our first question to her was, "Do you have, insurance on the property?" She said, "Yes, I have insurance." I said, "Okay, immediately get off the phone with us, call your insurance company, and notify them and let them know that the property is vacant. And if you can have a rider to your policy for vacant coverage." I said, because, ma'am, if something happens to that property and that property has been vacant and you have not notified your insurance company, they will try not to cover any claims. And now with anyone that we talk to that has a property that's vacant, that's the primary thing that we do. We say, look, hang up with us, call them, and then call us back. And that immediately builds up that trust, that level of integrity. And they say, you know what? I never even thought about that. Thank you so much. And 9 times out of 10, 90% of the time, they call us back and say, okay, let's finish up the conversation.
Yeah, and you become the one and only call at that point that they're going to
Yep,
want to deal with. It was nothing
absolutely.
like anybody else because you showed, you were leading them in the right direction, doing right by them right from jump, and
Yep.
that is tremendous. So you grew up in the Chicago area, right? 45 minutes south of
Hmm.
Chicago. One of my favorites, actually, my favorite city to visit in this country. I do love Chicago. It's a beautiful, fun city. Lots
Beautiful,
to do, great
beautiful.
restaurants, just an awesome, fun city. I know they have crime issues and stuff going on now, but every major city's got that going on
Yep,
right
yep.
now. They're
I
all
would say if you guys want to visit Chicago, go now, late May to about middle of September. After that, forget about it. It's too cold. It's
yes.
too windy. Just catch those summer months, right?
Yeah, absolutely. I've been there during the winter. I've been there during the summer, and I could totally attest to it that the summer is definitely more enjoyable. But I've been there during the winter time, or I should say late March, late winter, right?
Hmm.
For what's called paddle platform tennis. You ever hear of that? It's big
Yeah.
there.
Yep. Yep. Very big there.
We play there, and there's always a tournament there every single year. We had a good time, but yeah, it gets cold when you're going between those buildings. That wind is whipping, and it's snowing. It's beautiful. I love the snow. It's beautiful, but it gets cold. So I agree, Marcus. Go visit between now and September is the best time. It's
Yep. Yep.
a beautiful, beautiful time, and
You
there's
got it,
great
Paul.
boating you could do, and all kinds of stuff you could do there.
Yeah, that's one thing I like about the city. I mean, because you can get all aspects. I mean, you can drive north and be in between Chicago and Milwaukee and the orchards and stuff like that. And then you got Lake Michigan where you can do all of the boating. And then during the summer, I mean, it's a festival almost every day. So I mean, I can rave about my hometown. But I know our focus is real estate here, Paul.
Yeah, absolutely. Speaking of real estate there, so where did you first start investing? Did you start in the Chicago area? Did you go outside of the Chicago area? Where was your start?
Yeah. We started just outside of Chicago, just buying rentals and going in, renovating them and having tenants. And we also have a nonprofit that we work with adolescent youth that are, displaced. They were either failed adoptions or something like that. So we started buying bigger properties, 3,000 to 4,000 square feet, with a number of bedrooms. And now we have respite facilities just for the kids as well, where we get paid, from the state. So we have multiple avenues to where we use real estate in
Mhm.
order to generate income.
That's tremendous. That is huge. And you moved to Phoenix, what, about 10 or 12 years ago?
Right,
Are
right.
you investing in Phoenix now, or are you investing in multiple markets? What markets do you focus on?
Yeah, multiple markets, man. We're doing deals here in Phoenix. We're doing things in the Chicago market. Starting to tap, the Orlando market now. So we just kind of getting the lay of the land in Florida to see what we want to do there. But yeah, we're aggressively looking for assets to purchase.
It's awesome. And I'm in Florida now, and I'm investing here in Florida as well. As I think I told you before, I started just north of Philadelphia, and I started investing in PA, but I bought all over the country because we buy almost exclusively from online auctions. So
Oh
we bought
wow,
44 out of 50 states, and we know which ones
wow.
we like. We know which ones we don't like for sure. We've really concentrated on, say, call it between 10 and 15 right now that we really, really like,
Hmm.
and focus on. And I tell you, Orlando is a good one for you. Definitely a good one to be in because right now, what I'm seeing in Illinois, and I've had a few deals there that I've done this year. The market's shifting there for sure. It shifted
Hmm.
there a little quicker. And I know Phoenix has had an increase of inventory, so it shifted there a little bit. But baby boomers are still retiring. It's a Sun Belt. You still have people from California
Yep.
moving to Arizona, and that's going to continue over the next 10 to 15 years. So that market to me is still ripe and a great one to be in. And definitely Orlando is continuing to grow. So I think you'll have
Hmm.
great success out there in the Orlando market as well.
Yeah, you know what? Wherever the sun is, that's kind of where we want to be because people want a vacation. People want to be away from the cold. That's why we primarily just in Illinois just have our passive income because
Yeah.
you can buy low again and then generate that income. And then when we want to do something more transactional, we're
Mhm.
doing it, more so in the Phoenix market.
Yeah, that makes total sense because yeah, it's hard, much harder to cash flow a property in that Phoenix market
Oh
than
yeah,
it
it's
is.
terrible, terrible.
There's certain markets that have been really good for me for cash flow, and if hopefully this can guide you in some way too. The Carolinas have been really always great. Indiana, Ohio are always really great. Those are linear markets, right? They don't have the big ups and big downs. Although I think
Right.
the Carolinas might experience a little more of that now because since the pandemic, there's so many people that have congregated, especially to South Carolina, but North Carolina as well. And I've done Wyoming. Wyoming is sparsely populated, right? It's only 581,000 people, but I have a 12 unit building there, a 5 unit building, and a single outside of Gillette. And because
Wow.
real estate taxes are so low, they are so low. My 12 unit building on an acre land is only $3,259 a year for real estate taxes. My insurance policy costs me more than that. So that $1,000 per month per unit that I get, a lot more cash flow goes in your pocket. In this business, it's about the cash flow that you can keep that doesn't go out to whether it's real estate taxes or
Yep.
you know,
Yep.
in parts of Florida, we're going to have higher wind insurance or flood insurance, all these different factors that come into play that take money out of your pocket there. Some places have higher utility costs. Like this is a
Hmm.
strange one. I'm not sure if you ever run there's a company called Aqua PA. It's also Aqua Ohio, and they're in different states everywhere. For water, they seem to charge about somewhere between 6 and 10 times the amount that your regular water companies charge. So in these states, I generally don't buy and hold that have that particular utility because it kills your cash flow. It's
And
crazy.
you know what? I have Aqua in Illinois. And that's one of the problems is, it's the water bills are just so ridiculous,
They
and you
are.
can't pass that on to the tenants because what they will do is the water bill rides with the property. So
Right.
if you try and leave that responsibility with the tenants, naturally the tenants are just going to move. And now you're stuck with this high water bill that you got to pay.
Yeah, unfortunately, in different states like Illinois and Pennsylvania was the same too. Water, trash, all these different things are lienable to the property. So that means
Yep.
it becomes our problem as a landlord, and we have to deal with that. And these things do get expensive. So you just have to buckle up and pay it. The interesting thing that I used to have a property in PA that was 10 minutes from where I live. We had, I think it was called North Wales Water Authority. Our quarterly bill was less than a monthly bill of a little 3 bedroom, 1 bath house. And we
Wow.
were and we were a family of 6 and they were only a family of 3. And their bill was more per month than ours was per quarter by a lot, a significant amount, which tells me, something's not right with this water company and they're taking advantage, unfortunately.
Yeah, you know what, and you're striking a chord with me, Paul, because I'm looking to my right here, and that's what I have. I have a couple of water bills that I need to pay, and they're from Aqua.
Yeah, they get pricey. I totally
Yep.
understand. I sell those. The aqua properties are gone and I'll buy the other.
And you know what? I need to make note of that because yeah, you know what? It's hard to run your numbers when you don't take that into consideration. People look at the capex and they look at everything else, your mortgage, everything. But when you start getting water bills, that cuts directly into your net profit, it's ridiculous. You can run it and like I said, one of them, it's a 2 bedroom, 1 bath, and I'm getting $120 water bill every month.
That's crazy. That's
It's
just ridiculous.
crazy. Go
It should never.
figure.
They don't use that much water,
They don't
guaranteed.
use that much water.
It's just how they bill it and how it's just unfair. But it's one of those things we have to learn to deal with as buy and hold, like looking at all these different factors. Because I have a spreadsheet. I'm sure you've got a similar one on Excel, where you throw in all the numbers and it gives you your monthly cash flow. But if you add in Aqua's thing, or your $325 per month might be down to 150 per month, right?
Yep. Yep.
So it can change that. It changes the bottom line. So it's just something to consider for those people that are buying and looking at buying the rentals, the smaller, if you have a property that has well and septic, you're probably golden, right? That's probably the greatest thing you could ever have because your costs are going to be far, far lower.
Yeah, the only thing about well and septic, Paul,
Yeah,
is
there's some caveats.
yeah, before you purchase, you got to make sure you have that thing inspected because if you have that septic problem and you got to put in a new septic, all
Expensive.
right, yeah, 15 grand, 15 to 20 grand, just be ready to make that contribution.
What's interesting in buying all over the country, the different areas, right? The more arid areas, like for instance, Arizona, it's going to be cheaper to put in a septic than it is in Illinois or in Pennsylvania, where we were. where sometimes you have to do what's called a sand mount. They actually have to do an
Yep.
elevated one, and then your price goes up even substantially more, right? Whereas
Yep.
I went into New Mexico, a big one, brand new one, I think it cost me $8,000 for everything.
Yeah. Yeah.
Because it's so dry, it's different. Things drain differently, and the cost of those things are different. So I remember the first time a buddy of mine, Justin Williams, who's from California, was buying in different markets, and he goes, "Oh, needs a new septic? That's not going to be too bad." He's figuring like 8 or 10, and ended up needing a sand mount. So this thing was like a $30,000 job for him, and he's like, "Oh, it's killed my profit." I'm like, "Yeah,
Yep. Yep.
yeah."
And the reason why I talk about the septic is because me and my partner, we got into a flip here in Phoenix, and we it was it was right before the market shifted, right? So our whole idea, one of our students had got the deal. Our whole idea was we want to get this student their first deal, so they can get that check. They could be successful, rewarded. And we was like, okay, well, we'll help out with this. So we figured, all right, we'll just go ahead, take it down, because the seller was and pre-foreclosure, had liens. So we was like, all right, we'll just take it down versus wholesaling it. So we took it down, and then we thought we would just throw it on the market, because this is the time when everything was flying. Throw it on the market. We'll get it sold, right? So we didn't do a full due diligence. We didn't go in there and look at everything. Come to find out, the market shifted. Nobody was buying it, no interest. So we was like, all right, plan B, we need to go in here, spruce this thing up, make it look pretty, and then sell it traditionally. Well, once we went in, we found out, okay, it was on a septic and not the sewer. It was other things that was going on with it. Lo and behold, we had one septic company come out and tell us, hey, you know what? You need a totally new septic. The lid is cracked, yada, yada, yada. It's going to be about 15 grand. And I was like, you know what? Let's just get a second opinion. Had a second opinion, and he was like, no, we can use what we have. It'll cost you about $2,000. So you just got to be careful, when you're in real estate, because there's some things that can come up that you just really don't budget for.
So true. And you getting that second opinion is so important. We did a deal in Dallas Fort Worth last month where needed a new AC unit. And one of the guys came in and it was like 12, 13 grand. I'm like, no, that's not what it costs for a new AC unit on a little ranch property. And we brought in a couple other people, and one guy goes, no, it's going to be $2,850. I'm like, now you're talking to me. This is exactly what it is. And this is why it's so important. Like a lot of investors, especially new investors, would just get one quote from her and just pay it. Don't do that.
Yep.
Get multiple quotes. If you're dealing with a realtor, talk to them, because they know, in general, they know a lot of tradespeople, because they deal with a lot of tradespeople, a lot of handymen, and they can get you some pretty good quotes and usually some pretty good numbers. So it's so important to do that. Like you said, you just don't want to get caught in a bind there with septic.
That's one of the biggest things. And, if I can speak to a newer real estate investor, is start building out your team now. Even though you don't have a property or anything like that, you want to start researching, who's good contractors, who's a good, AC guy, who's a good electrician, and start using them on your personal home. Get familiar with them. And then when you go out there and you start buying or acquiring assets, you can say, all right, now we want to move to this. We want to move to this. We need you to do work over here. So start building out that team now, because as we all know, real estate is a team sport.
Sure is, Marcus. That is some great advice you're giving there. It is pivotal and super necessary if you're going to be successful in this business, because you need good contractors. Without good contractors, it's just really difficult in this business to do really well, and they just eat up all your profits. So you need guys you can depend on and trust, and not drag out rehabs on you. And because time is money, right? And the longer the rehab goes, the more insurance, more interest you're paying, more real estate taxes, all these different things. Before you know it, your $30,000-$40,000 profit is suddenly down to a $15,000 or $20,000 profit. And that's just what you don't want to have happen. So you want to stay on top of things as much as possible. So you've also done some commercial deals. I'm sure you dabble in both residential, commercial, like I do as well. What type of commercial deals do you do?
You know what? We bought a couple of schools, actually. So we bought one school, turn of the century. It wasn't a huge school. It was only about 4,000 square feet. And the city was actually going to raise the property. They were going to tear it down. So they said, open bid. If somebody wants the property, make a bid on the property. If not, we're just going to tear it down. So immediately, to me, that's like, okay, red flag.
Hmm.
Nobody buys it, they're going to tear it down. So went and took a look at it. We couldn't go on the inside because it was like a closed bid or whatever. But with our nonprofit, we were looking at starting up a daycare, and we thought, this is perfect.
Yeah.
Let's put in an offer on this, see what we can do. And now we own that property. It was, like I said, turn of the century school, about 4,000 square feet, and we're running a daycare out of that. So now I'm triple net lease, don't have to worry about anything. And I just have the income coming in off that property. So we did that one. And then we have another school, which is a bigger school that we run some of our programs out of. So we have it set up where we have our nonprofit entity, kind of leasing the properties from our leasing company. So we have it structured to where we can help, both businesses can help each other out.
That is awesome. And that is something that your average flipper doesn't do, right? Thinking outside the box you are with this. And this is really good stuff. I'll give you a little story. My cousin, who's a builder in Pennsylvania, he bought an old schoolhouse. Again, not a big one, kind of like what you're talking about there, about a 4,000 square foot, turned into a 13 unit building, and just totally renovated it. Had great cash flow from it, ended up selling it 15 or 20 years later on because he just got tired of dealing with it, was kind of going to retirement. But that's thinking outside the box. He got a good number on that, as you probably got a good number on the school here.
Yep.
And then you got a great long-term asset, triple net lease. What people don't know, a triple net lease is your tenant pays for everything, your taxes, the insurance, utilities, everything they're paying for you.
Yep. Repairs. So I don't have to worry about anything.
Yeah. It is the best. That's why commercial is kind of underutilized by a lot of investors out there. There's a good friend of mine, Roy Awala. He does a lot in Virginia with this too, and he'll actually turn old motels into longer term stay places, which I think is a brilliant way to do it too. But no, it really is. I'm looking for some of those too, all over the place. But it's got to be in the right market, right place, right? You get the right team, like you were saying before, the right team of contractors to be able to go in and handle, because that's a big project. That's not the one where you get into there. But no, the triple net leases are great. And so if you can find the right things, and a lot of instances, since COVID has changed everything, and we're seeing the commercial real estate, which is really more office space type of stuff, and retail get hammered. Now we can look to conversion. What could we do if we get a really good number on a place like that? What can we convert that to? And we as investors, we know there's a shortage of low income housing or entry level housing. Maybe we could turn something like that, storefronts, even into rentals at some point down the road. But there's got to be something we could think of. Malls. What do we do with malls, right? Malls could end up being something like that too, where it's becomes like a promenade. Promenades are becoming more and more popular. I think they're pretty popular in Arizona as well, where you have all the commercial stores below, and then all above is, all residential built-in customers for those businesses there.
And you know what? It's funny that you bring that up, because I had an investor talk to me about that, and it was actually a mall in PA. I can't remember where at in PA, but
Montgomeryville Mall, was it? Because it went into foreclosure at one point.
I can't remember which. This was probably about 6 or 7 months ago. They had put it in front of me, and I was looking at it, and I just didn't know the market. If I knew the market a little bit better, it would probably be something that we would have tried to partner on and do. But like you said, that's a heavy lift.
It is.
If you don't know what you're doing. So yeah, we kind of passed on it, but interested to see what ended up happening with that.
Yeah, and how long? Because that's a long-term one. You have to go. What Marcus is talking about here, you got to go through the planning board to change the zoning.
Yeah, rezoning.
Because it's not just residential, right? I mean, if you want to convert it to residential, that's a heavy lift to get it approved to go there. Now, if that happened and you're able to do it, you could essentially do nothing to that building, resell it, because you got it rezoned. A lot of builders do this, right? And then make a profit by doing nothing other than sitting on it during that period of time. But renovating a mall and turning it into something, that is a heavy lift. I probably would have passed on that same thing.
Yeah, very, very heavy lift. I was like, you know what? I'm not quite ready for that. Yes. Yeah, and then you'll have to get your capital lined up, get your investors, ready to go for something like that. And then where we're at, we're just not at that stage yet, and then you don't want to put something like that in front of your investors, and then they say, okay, well, you haven't done anything like that. So now you're starting to create a little bit of skepticism within your investor community. So you just want to make sure you stay in your lane. That's what I'll
Yes.
use. Yep.
That's so smart. But as investors, we tend to get bored and want to do some different stuff at times, but you don't want to ever just get away from what's been working. If it ain't broke, don't fix it, right? Keep
True.
that going. For the things that aren't working as well in your business, maybe you modify and do that. I'm doing a little bit of a shift right now where I'm trying to buy land. I do have a piece of property in Kansas, Scranton, Kansas, a little town outside of Topeka, that I'm going to be putting a modular home on, basically a prefabricated home on. And this is something I want to do more and more of. And there's opportunities here in Florida to do this. And somebody I know is doing quite well with this. He's picking up land for like 10 or 15,000, picking up one of these prefabs, paying 150 all in, call it, and into the property, and selling them for like 300 or close to 300. So it's good profits, and
Yeah.
6 to 8 weeks and you're all done. Unlike a regular build, right, where you're talking
Right.
months and all this preparation. So it is another thing that I'm looking to switch into, but I'm trying to do, and I'm trying not to do shiny object syndrome, which a lot of us entrepreneurs have, right?
Yeah. Yeah.
Where, oh, this looks good, that looks good, because you don't want to do that. If what you got is working really well, keep that. Try to get that set up on autopilot where it can work well without you having to babysit it every day, and then start up another secondary thing. I think that's probably our best way to do it.
Yeah, you got to have that foundation. What's the foundation? What do you like to do? And use that as that foundation. And then once you, like you said, get that on autopilot, now you can start tinkering and say, all right, okay, this looks a little interesting. Let me kind of delve into that and see if it's something that I want to do. But yeah, one of the biggest mistakes, again, with real estate investors is, hey, you know what? I'm going to do a little bit of this. I'm going to do a little bit of that. I'm going to do a little bit of this, because we get bored. Most entrepreneurs, brains are just completely wired different. We always got to be tinkering and playing with something, building something, just to see if you can do it. Really, it's just kind of challenging yourself. And sometimes we get off track by doing that. And I'm completely guilty at that.
Me as well. And I mentioned it when this broadcast first went on here at the beginning of the show here, that you and I have something very in common. I want to make sure I get into this subject here, because it's something that not a whole lot of people. Both Marcus and I were high school dropouts, and we got our GED. Now, I got my college degree. Marcus went up me, and he got his master's. Why don't you talk a little bit about your journey and how you went from, like, why did you drop out of high school?
Okay,
And,
sure.
and what led from there?
All right, from GED to MBA. You know what? I was just bored. School was just not challenging for me.
Yeah.
Like we talked about, I was a tinkerer. I always wanted to break stuff down, see if I could put it back together, or if I can create something totally different from it. And I was always the kid that challenged the teachers, and I was that why kid. Well, why we got to do this?
Yeah.
Why we have to do that? Because I'm trying to understand. I'm trying to grasp the concept of why I need to learn geometry now. How is it applicable to my life when I get older? And a lot of times teachers couldn't explain that to me. So I was like, well, then why do I need to do it? Why am I reading, about Paul Revere? What does this have to do with what I'm going to be in the future? And
Right.
part of the problems was, to be completely honest with you, Paul, I didn't know what I wanted to do in the future. A lot of kids say, all right, at the age of 10, I want to be a doctor. I want to be a scientist. I had no freaking idea, because I was just living life. I was like, I'm a kid. I like to do this. I like to do that. But I just remember, and it took me until I was about 45 to really understand, when I was a kid, I did know what I wanted to do. I wanted to be a builder, but I didn't know, because nobody spent time with me to say, okay, what do you like to do? And how can we transform what you like to do into something that can be long-term for when you become an adult? So nobody took the time to do that. So I was always just finding myself challenging teachers, about different assignments, and that would always get me in trouble because I was bucking against the system, so I was the anarchy kid, you're not gonna do anything, and I leaned into that, right? Once they said that's who I was, I leaned into that because I was like, yeah, I'm gonna challenge you because I don't understand, and I want you to help me to understand, and if you can't help me to understand, then I'm not gonna do it because you don't even know the reason why I need to do it. So that did get me in a lot of trouble. And then this was like 2 months before graduation. I just dropped out because I was like, you know what? I don't think I'm a graduate. You know what? Instead of doing that, let me just go and get my GED. So I went from the back of the bus to the front of the bus because I got my GED
Before they graduated.
before they even graduated. Right.
Yeah.
So I found myself like, okay, well, all right, now I'm ahead of the curve. What's next? So I took some time, again, tinkering, trying to figure out what I wanted to do. And then I finally, put my big boy pants on and went to college and got my degrees, and really not even using those degrees in the craft
Yeah.
that I'm working in. So yes, my MBA does help me, theoretically with solving problem solutions, mathematical equations, things like that. But outside of that,
Nothing.
Nothing.
I tell you what, Marcus, we are birds of a feather. Where they say birds of a feather flock together. I bucked against the system too. I challenge teachers all the time, but unfortunately, our educational system was not created to handle people like us, because if it was, it would actually teach, right? You're not teaching. What only thing they're doing is telling us memorize this, and you'll forget about 90% of it in a month. So what's the point of learning it like this way? What we want to do something where we're learning a life skill. Like, we don't teach life skills, and we don't teach people that we need in school. This is that we need tradespeople, that we need plumbers, we need electricians. We need guys who are willing. My middle son's about to go to school for HVAC on Monday. He's starting, just graduated high school. Listen to me, you don't need to go to college. He's going for HVAC. And you know what? He'll be, in 9 months, he'll be done a program and making really good money. Where my older son is going into his junior year of college. He's going to get out of college, maybe have some debt. And he's also going to have those 4 years where he didn't earn any income. Now, to his credit, he's playing baseball in college, so he's enjoying it and he's getting something out of it and stuff. But our education system has completely failed us, Marcus, basically is what it is. And entrepreneurs like us, people like us who have this mindset, let's go back to the educational system. If they use things like the predictive index or Colby, they would know where to place people like you and I, what classes, because we need different types of classes, because we learn a different way, right? And everybody learns different ways, but they teach like everybody learns the exact same way, and everybody's going to, they're teaching sheeple, and we're not sheeple is what it comes down to.
That's true. That's true. Actually, you know what? I look at it this way. We were just disruptors, and we didn't know that we were disruptors, and they didn't know that we were disruptors. What we were to them was we were distractions in their classrooms. We're distractions. No, we were disruptors. We were thinking outside of the box, right? We were not sheeps, being just led. We wanted to know, all right, where are we going? Why are we going there? How long is it going to take us to get there? And once we get there, what are we going to be doing? That's what we want to know, not just this is what you're supposed to do.
Yeah. And they don't like to be questioned. And I'll even go, and I was in Catholic school for 4 years. And this still bothers me to this day. In religion class, I still remember teacher's name, Miss Gillespie, because she bothered me so much. She's like, we don't worship false gods. And I raised my hand, like, she's like, Paul, like, do you genuflect in front of that statue there? Like, that's a false god, right? That's not God. And we don't pray to false gods either. I'm like, wait a minute. Is Mary a god? Then why are you praying to Mary? Why are you like, everything you're telling me is a contradiction. I don't, and I got in trouble for that. She called my dad in. Her mistake. My dad's an atheist.
Oh,
so
wow.
she thinks he's going to rip into me during this meeting. And I'm just sitting there. And my dad goes, sounds like the kid had some pretty good questions. What were your answers for them?
Yeah.
Her jaw goes, and I was like, oh my God. I'm like, yes, I gotcha. Like, we just have questions. Like, if it doesn't make sense, right, logically to us, or we want to know, maybe there's something we're missing here. And unfortunately, the school systems, even in college, Some teachers are better at it in college because they have a little more freedom to do some things, right?
Yep.
And make you think more creatively. But overall, it's just not, it's not meant. Like, we're going to be entrepreneurs, we're going to be successful. We didn't need school. We're still able to do it on our own. So
You know what, Paul, I didn't see the value of school until I had teachers and I had classes that would resonate with what I wanted to do in the future.
yeah.
So it was those classes, architectural classes, some construction classes, things like that. Now I can say, okay, I see how this can
Mhm.
apply to in the future. But a lot of things, me learning the molecular structure of a cell, who cares?
Doesn't
As
matter,
long as
right?
right, as long as blood keeps pumping through my vein and my heart is still pumping, I'm fine with that. If I need to know that, I'll go to a doctor.
Right.
So it was things like that they just really didn't want me to question.
No, they don't like that. They don't like questioning. That is for sure. Now, let's go back to, you are actually a teacher now and a coach, right? And what Marcus will actually teach you is useful things for life and business here.
Hmm.
So, and Marcus Maloney, marcusemaloney.com, you can go in there and you can get some free things under the toolbox, which, by the way, I signed up for, just so you know, there. I went to test it out. I
Thank
love
you,
it.
Paul.
And your contract is great. I love your contract that you have there. I'm looking forward to seeing other stuff too. But your educational program is very affordable. And for anybody
Hmm.
looking out there, it's only $19.97. That's one of the most affordable ones you will see out there. And if you're a do-it-yourself study at home program, is only $6.95. So go take a look at that. Marcus has so much information here, and he has so much stuff on his website. And you also have your own YouTube channel and your own podcast, right? And your podcast is the We Love Equity Real Estate Show. So
Yep.
make sure everybody, you check this out. And Marcus, I know you got a hard stop coming up here, so I don't want to hold you too much longer. One last question I have for you before we go here.
Sure.
If you can give one piece of advice to a newer investor out there, um, what would it be? Anything in particular? What
One of
comes?
the things that I always tell people is enjoy the journey. Don't be so worried about the end destination, where you're trying to get to. Just enjoy the steps along the way and make sure you know those steps. And that's one of the things that we teach, in the course is, okay, you want to get to this end goal, but these are the things that you need to do in order to get there, and be happy while you're doing it, because you're learning. And we're not teaching you, to go from zero to 500 million. We're trying to get you to go from zero to a consistent 2 or 3 doors, or go from zero to 1 door. What does that look like? So it's always enjoying the journey, Paul, and then be consistent, guys. Whatever you're doing, be consistent at it, because, Paul, I'm sure you understand, in order to get a deal, you got to be consistent,
Yeah.
with your marketing, talking to brokers, talking to sellers. You have to be consistent at it. And that's one of the biggest mistakes that aspiring real estate investors go through, is they start, they stop, they start, they stop. So be consistent, guys. Sprinkle on a level of a little bit of persistence, because you're going to get denied, you're going to get rejected, and then enjoy the journey along the way.
It is. It is a fun ride. There's no doubt it has its ups and downs, just like any business, anything in life. But real estate truly gives me, and I'm sure gives you the same thing. It's a lifestyle business, right? We can create our business around our life. It allowed me to coach my 3 boys in travel baseball for 11 years, coach them in basketball, coach them in football, had so much fun, made so many great memories, and met so many other great kids that I coach that are now graduating. I just got invited up to a graduation party that I'm actually going to fly up to Philadelphia for, one of my
All right.
truly favorite players and family. And they invited me, and I'm going to go up there and do that. So it is, again, if I didn't do real estate, if I had a 9 to 5, I wouldn't have been able to coach that. And I wouldn't have had this opportunity here and to make impact on kids' lives and stuff. So it's tremendous. I love it, Marcus. Thank you so much for your time. Thank you so much for coming on here. And I definitely want to connect with you offline here, and we'll definitely keep in touch and definitely talk further here.
Well, thank you so much, Paul. Thank you for allowing me to speak to the Flip Out family. And you continue to keep doing what you're doing, man, because we need impactful educators out there that's trying to help, aspiring real estate investors get to where they're trying to go.
Absolutely. Thank you again, my friend. And everybody out there, we will catch you in the next episode.
Thank you.